Now let's go into the second part of the year. We came to the bar chart. Unfortunately, this is not a chart at the bar. A bar chart is a little more complex. It's showing the open and the closing price as well as the high and the low. Bar chart help a trader to see price range on each period, depending on your time frame you trade in. Bar chart may increase or decrease in size from one bar to the next or over a range of bars. The bottom of the vertical bar indicates the lowest trade price for that time period, while the top of the bar indicates to the highest price paid. The vertical bar itself indicates the currency pair trading range as a wall. As the price fluctuation become increasing volatile, the bar become large. As the price fluctuation become quiet, the bar becomes small. The fluctuation in a bar size is because of the way each bar is constructed. The vertical high of the bar reflected the range between the high and the low price of the bar period. The price bar also records the period opening and closing price with attached horizontal line. The horizontal hash on the left side of the bar is the opening price. A horizontal hash on the right side is the closing price. Here is an example of bar chart for British Pound USD or cable, like I told you before. Now you see it here. It's like a little bit weird because I don't trade by them. So let's move. Take note throughout our lesson you will see the wall bar in reference to the signal pace of data on chart. A bar is a simple one segment of time, whether it is 1 day, 1 week, or 1 hour, or 1 minute, 5 minutes, 1 month, depending on what time frame you're using. When you see the wall bar going forward, be sure to understand what time frame it's referencing. Bar chart also called UHLC chart because they indicate the open, the high, the low, and the close. That's where it came, that word UHLC. For that particular currency pair, a big difference between a line chart and UHLC open, high, low, and close chart is that the UHLC chart can show in volatility. Let's dive now, and here I will explain it more to you. Here, as you see in the picture here, that here is the open. The open is the little horizontal line. On the left is the opening price. The high, the top of the vertical line, that highest price of the time period. The low, the bottom of the vertical line, definition, the lowest price of the time period. The close, now one, the little horizontal line on the right is the closing price. I think everything is clear here. Let's dive into other part. Now we came what majority of the traders use, the candlestick chart. The candlestick chart is a variation of bar chart. Candlestick chart showing the same price information as bar chart, but it's pretty graphic format. Sorry, many traders like this chart because not only it's pretty, but it's easy to read. Candlesticks bar still indicate the high, the low range with a vertical line. However, it's a candlestick charting the large block or body. In the middle indicate the range between the opening and the closing price. Candlestick help you visual bullish or bearish sentiment. I think I explained what I mean bullish and bearish sentiment by display body using different colors. Traditional is the block in the middle, it's filled or colored in. Then the currency pair closing lower than its opening. In the following example, the filled color is black for our filled block. The top of the block is the opening price and the bottom of the block is the closing price. If the closing price is higher than the opening price, then the block in the middle will be white or hollow or unfilled. As you see down here that the examples here that is named the tail or the shadow, that the upper tail or shadow, that the lower shadow or the lower tail, here the body, depending if is it, because also we using green and red, I will explain it more. If is it green, over here is going to be the open and here the close. If is it red, over here is going to be the open and over here is the close. I think that things is very easy. Let's move more. Me personally, I don't like to use the traditional black and white candlestick because I find them very weird. It just looks so paling and very weird. And since we spend so much time looking at chart, we feel it's easy to look at chart that colored. I am right or no? A color television is much better than a black and white television, so why not splashing some color on those candlesticks? That's why I'm using red and green candles instead of white and black, because white and black they look very old. I feel myself getting age quickly. Let's see more. And here it's an example of candlestick chart for British pound USD dollar, and don't worry, I will show you how to do everything like that show in my course. And you see here the candlesticks. So let's dive in. The candlestick. The purpose of candlestick charting is statically to serve as a visual aid since the exact same information appear on a NUHLC. Think that the bar chart. The advantage of candlestick charting are candlesticks are easy to interpret and are good place for beginners to start figuring out forex chart analysis. Candlesticks are easy to use. UIs adapted almost immediately to the information in the bar notation, plus research show that visual help with study, so it might help with trading as well. Candlestick and candlestick pattern have a color name such as the shooting star, which help you to remember what the pattern meant. Yeah, because now there's a lot of name to those candles, but that's not our lesson. Candlesticks are good at identifying market turning point, reversal from an uptrend to a downtrend or a downtrend to an uptrend. You will learn more about this later.